me a little bit more about the implications of a less than forecast trade surplus for China makes a change, what the smallest surplus since April. To what extent does this boost China's position when it comes to the yuan?
Well, I think obviously trade data is notoriously volatile, but aside from that, I do think there's a division between the reality and the perception. Even at Bank of America Merrill Lynch, our own models suggest that the undervaluation of the renminbi may be as little as 5%. That said, we clearly have a political cycle and a political agenda to get China to appreciate more. And in addition, from China's perspective, inflation is also an issue. So I do think, even though this trade data would be less suggestive of appreciation, that Chinese renminbi appreciation is still on the card, modest as it may be, and our expectation for 6.4 on dollar China by the end of this year.
So this doesn't necessarily mean less appreciation pressure on the yuan in the short to medium term future?
No, obviously we have the upcoming meeting between President Hu Jintao and the President of the US, as has been mentioned in the previous report. We could get some window dressing on the renminbi leading up to that. In addition to that, we have a lack of clarity in a vacuum at the moment in terms of policy direction in China. We haven't had anything really said or declared about the new loan quota for the year, and that may not be announced. And we also have a new situation where there could be apparently monthly meetings with respect to setting the reserve requirement ratio. And under that uncertainty, perhaps the clearest way to go would be a better indication on the FX as a means to tightening monetary conditions in China.
So what are your expectations then for the yuan's appreciation in 2011? Will it be faster than last year, certainly in the first half?
Well, as I've mentioned, our expectation is modest to the extent that we have a year-end forecast of 6.4. The NDF forwards are pricing at about 6.47, so we're slightly more optimistic than the non-deliverable forward market expectation. As far as the consensus goes on Bloomberg, we've got 6.27. So I would concede that maybe there is some more upside in terms of where the consensus is pointing to, but really what we have to focus on will be the inflation numbers. The more sustained headline inflation in China is above the 3% watermark, we're currently at above 5% or thereabouts, the more persuasive the argument is, or the more pressure there is on the administration in China to try and take away that inflation pressure with some FX appreciation, in addition to reining in the lending that's going on in China at present.
But what will the impact, or should I say, what will the risks be of a stronger currency and higher rates?
Well, that to some degree is an unknown. I mean, the pass-through that is commonly estimated suggests that the pass-through is not as strong as would be anticipated on China, partly because clearly China exports a lot and China imports a lot, and there is still a relatively large non-traded goods sector in China. But that said, I think we've seen in the past, particularly at the point where China appreciated its fastest point in late 2007, that was really related to a combination of high headline inflation, high export growth, and to a degree high monetary or money supply growth. We don't clearly have that overall strength in the picture of China, but we do have components of it, particularly on headline inflation, that do persuade us, or do suggest, I should say, that the risks are for further tightening, both through monetary policy and through the FX policy.
Claudio Piron from Merrill Lynch in Singapore, thank you so much for speaking to us. Really appreciate that.